Welcome to the Deep Dive, the show where we cut through the noise and get you straight to the insights. If you've been watching the markets lately, you know Bitcoin has been on, well, an absolute roller coaster. Just recently, it staged this dramatic rally, hitting an overnight high of $122,300. That's practically knocking on the door of its all-time high, $123,200. But then, almost as quickly, we saw some profit taking. Prices settled back down, hovering around $118,000. Today, we're really going to dig in. We want to go beyond just those, exciting price charts. Our mission here is to explore the profound structural shifts happening in the Bitcoin market right now. We're pulling together everything, the latest institutional moves, regulatory earthquakes, even some surprising technical indicators. Basically, this deep dive is your shortcut to truly understanding what's driving Bitcoin's trajectory. Okay, let's unpack this.
Yeah, and it's really important to grasp that this isn't just about short-term ups and downs. What we're seeing reflects a much deeper integration of Bitcoin into the whole global financial system. This is being driven by significant institutional interest and also a rapidly evolving regulatory environment. It's really a foundational change that's redefining its role.
Okay, let's jump right into that immediate market performance then. That rally to 122,300 and then the swift pullback to 118,000. I mean, for Bitcoin, that's almost standard fare, right? But what exactly should we be reading into that specific price action? Is it more than just traders taking profits off the table?
Well, it definitely looks like a market that's actively finding its new stable ground, its new equilibrium after these big moves. That consolidation around $118,000, especially after such a quick surge, it indicates that the market is becoming increasingly influenced by institutional capital. It's less about pure retail speculation driving every single swing now. You've got the big players establishing these new balance points. And look, the overall performance remains incredibly strong. Bitcoin's year-to-date gain is what? Plus 27.47%. That's impressive.
That really is.
And to put that in perspective, it's actually second only to gold this year. Gold's seen about a 29% increase in 2025. That comparison alone is powerful.
Absolutely. Okay, we've talked price action. Let's shift to the sheer scale of Bitcoin's presence now. Here's where it gets really interesting. What's the latest on its market capitalization, and how does that truly stack up globally? Because the numbers are staggering.
Oh, they really are. Bitcoin's market cap hasn't just grown, it's exploded. Recently, it hit somewhere between $2.36 trillion and $2.421 trillion. The key insight here, though, isn't just the number. It's that Bitcoin has officially surpassed giants like Amazon. It's become the sixth largest asset worldwide.
The sixth largest, wow.
Exactly. This isn't just a numerical achievement, it's profoundly symbolic. Bitcoin is now sitting there among the world's most valuable companies and assets. It forces traditional investors, frankly, to fundamentally reevaluate its role in their portfolios. This powerfully reinforces that whole digital gold narrative, And its potential as an inflation hedge, especially when you look at its long-term returns compared to traditional stuff. It's just not a fringe asset anymore. It's a global force.
And on the technical side, we're seeing some fascinating signals that kind of underscore this whole shift. For example, the DVL index, which measures implied volatility, it's risen to 37. Now, that tells us the market expects more significant price swings, more fluctuations in the near future, which means, heightened opportunities and risks for investors.
More chop expected.
Exactly. And interestingly, Bitcoin also just broke out of what's called a descending triangle pattern. Now, normally, this is a chart formation seen as a kind of warning sign for falling prices, but Bitcoin just powered through it. Strong bullish momentum. That signals a pretty significant shift in sentiment.
Right. Breaking bearish patterns is always notable.
Yeah. And we're also watching key resistance levels now, particularly around $125,000. And traders are closely eyeing that CME futures gap. It's between $117,000 and $119,000. For those maybe unfamiliar, think of a gap like an unfilled price void. It happens when futures open way different from where they closed. Yeah. And often, these gaps act like a magnet, pulling prices back to fill them.
Right. Price often revisits those levels. But what's fascinating here is how Bitcoin's short-term price path is now so explicitly linked to traditional monetary policy. We're actually talking about upcoming U.S. CPI, that's the Consumer Price Index, measuring inflation, and PPI, the Producer Price Index, tracking wholesale inflation. These data points directly influence what people expect the Federal Reserve to do with interest rates, rate cuts. This means Bitcoin is increasingly responding to the same economic forces that move stocks and bonds. It signals its deeper integration into the whole macro financial system.
So it's not operating in its own bubble anymore?
Not at all. It's no longer this isolated asset. Investors absolutely must consider Bitcoin within the broader context of global economic trends, central bank actions, the whole nine yards.
That deeper integration, well, it naturally has massive implications for how Bitcoin is viewed and handled by regulators, too. And on that front, there's been a really interesting development. Paxos, the stablecoin issuer, they've renewed their application for a national trust bank charter in the U.S.
Right, they tried this before a few years back and it stalled.
Exactly. So what's the significance this time around?
Well, it's hugely significant. If they get it, if it's granted, it would unequivocally legitimize digital asset operations within traditional finance. It enhances liquidity, trust, basically everything for the broader crypto market by bringing digital assets properly into the fold of federal oversight. It's a big step.
Okay.
And it's not just the U.S. Look at El Salvador. They just approved an investment banking law. This allows banks there to provide Bitcoin and other crypto services, specifically targeting sophisticated investors. You need at least $250,000 in liquid assets.
So targeting high net worth individuals.
Precisely. This sets a kind of global precedent, opening new avenues for wealthier individuals to engage with Bitcoin through regulated institutions. It shows this growing acceptance at a national level.
These regulatory steps really seem to be paving the way for, well, that surge in institutional adoption we keep hearing about. We're seeing major corporate treasury additions almost daily now, it feels like. Take Sequence, for instance. They recently bought another 13 Bitcoins, average price around $117,000. That brings their total stash to over 3,100 Bitcoins. Cost them about $370 million overall.
Yeah, that's a serious position.
And then there's the Smarter Web company. They just snapped up an additional $35 million worth of Bitcoin. Their total is almost 2,400 BTC now. And beyond just those two examples, the Bitcoin Treasuries report recently highlighted, 53 announcements, and around 5,000 BTC accumulated by various firms in just 1 week.
Yeah, and this consistent corporate buying is absolutely critical. It does two things. Contributes to sustained demand, obviously, but it also reduces the available supply floating around. It's a direct signal of long-term strategic investment. This isn't just speculative trading. These are companies making big bets. We're also seeing diversification within the mining sector itself, which is interesting. For example, MRRA, the big Bitcoin miner, they're considering a $168 million stake in a French data firm. And Kango Inc. just bought a $19.5 million mining facility down in Georgia.
So they're branching out.
Exactly. It shows a maturing industry. They're looking to diversify revenue streams beyond just pure mining, building out a more robust ecosystem around Bitcoin.
So what does this all mean? I mean, this constant corporate accumulation seems unequivocally bullish for Bitcoin's price, right? Signals deep confidence. Yet you mentioned there's a significant long-term implication here that raises some pretty serious concerns.
Exactly. This is where we need to talk about the Fort Knox nationalization concern. It's a topic recently brought up by crypto analysts Willy Woo and Preston Pish. Their worry basically is that these huge corporate Bitcoin holdings were already over $100 billion, which is about, 3.98% of the circulating supply, could become target.
Targets for whom?
Government. Precisely. They suggest governments might eventually try to centralize or even seize these holdings from the institutional custodians. And the thinking is these custodians, being regulated entities, would likely comply to avoid, massive legal repercussions. This introduces a profound potential centralization risk.
The Fort Knox idea is certainly unsettling. And it does raise that critical point about centralization. Bitcoin was born out of this desire for decentralized, censorship-resistant money, after all. But couldn't you argue the flip side? That this institutional involvement actually brings more stability and legitimacy to Bitcoin, maybe balancing out that risk.
Well, that's the paradox, isn't it? It's the core tension. On one hand, yes, institutional adoption brings capital, credibility, infrastructure. That's inherently bullish for the price for mainstream acceptance. But on the other hand, the very act of concentrating large amounts of Bitcoin into these regulated, identifiable entities, well, it potentially exposes it to exactly the kind of government control its original ethos was designed to circumvent. So this raises an important question. How does this potential centralization risk challenge Bitcoin's core decentralized ethos? It's a fundamental tension. And how it resolves will likely define Bitcoin's future as it matures within the global financial system.
That's a really complex tension to navigate.
Yeah.
Okay, but let's turn our attention now to what the market's feeling, the sentiment, especially among futures traders. Because there seems to be a surprising disconnect happen. Despite Bitcoin hitting these near all-time highs, there's a surprising amount of bearishness among those futures folks. The Commitment of Traders Report, the COT report, which shows how big institutional players are positioned in futures. It hit its lowest level since 2021. What's going on there? And what does that mean for the average investor?
Right. This sentiment mismatch is actually seen by many as a powerful contrarian indicator. Historically, buying when the COT report hits lows like this has often led to pretty significant gains down the road sometimes, like
Yeah.
85% over a year in past instances.
85%? Wow.
Yeah, so it suggests that this current rally isn't being driven by, say, irrational exuberance or purely speculative futures positioning. Instead, the argument goes, it's being fueled by strong underlying spot demand. We're talking long-term holders, those corporate treasuries we just discussed, ETF inflows, real buying.
Got it. Organic demand.
Exactly. This fundamental organic demand mean there's considerable room for further upside. You hear analysts throwing out targets past $200,000 based on this kind of dynamic. And we're also seeing rising bullish sentiment in the Bitcoin options market, which often reflects the views of more sophisticated traders. So that hints at optimism among those who really understand the underlying mechanics.
And it's fascinating because it's not just about investment anymore, is it? We're seeing Bitcoin being adopted in incredibly diverse ways now. I mean, Jeff Bezos's Blue Origin is now accepting crypto, Bitcoin, and Ethereum included for space travel payments. That's kind of wild.
Space travel, yeah, talk about reaching for the moon.
Literally. And back here on Earth, the U.S. convenience store chain Sheetz is offering 50% daily discounts if you pay with Bitcoin. It's pretty amazing to see it move from just digital gold to something you could use for, well, daily transactions or luxury experiences.
Absolutely. And if we connect this to the bigger picture, these examples, space travel and convenience stores, they represent significant steps in both mainstream retail and luxury adoption. They enhance Bitcoin's utility beyond just being a store of value. It's becoming a transactional currency for, well, everything from a quick coffee to a trip to orbit. That's a massive leap for its usefulness.
It really is.
And, on the mining front, too, we're seeing shifts globally. Like Ethiopia is suspending new crypto mining power licenses because they're hitting capacity constraints.
Okay.
Now, while that might limit growth there, it could actually redirect mining capital and infrastructure to other regions. That influences the network's hash rate distribution and could potentially make other areas more competitive hubs for mining.
So constant evolution on all fronts. With all these developments then, both the positives and the, let's say, potential challenges like the Fort Knox idea, what are the key growth drivers and risks you see for Bitcoin moving forward? What should people be watching?
Okay, on the growth side, layer 2 solutions are absolutely critical. You have to think of Bitcoin's main network like a single lane road. It works, but it can get congested, slow, and expensive during peak times.
Right, the transaction fee issue.
Exactly. Layer 2s are like building express lanes on top. They allow for faster, cheaper transactions that happen sort of off the main chain without burdening the main network directly. This could dramatically boost throughput, how many transactions can happen, and might even enable more complex smart contract capabilities, which is essential if Bitcoin wants mass adoption beyond just being digital gold.
Makes sense. More capacity, more use cases.
Precisely. As for risks, well, we definitely need to keep monitoring ongoing regulatory headwinds. Inconsistent or overly harsh regulations across different countries could really impede growth and adoption. Then there are the macroeconomic shifts, unexpected inflation spikes, or maybe overly aggressive central bank actions. These could challenge Bitcoin's inflation hedge narrative, especially if it continues to correlate closely with traditional markets during downturns. Then there's that geopolitical nationalization concern we discussed. The risk, however small some might think it is, that nation-states might seek to control significant holdings. That's a big what if. And finally, just the basics. Continuous network security and development are absolutely paramount. Maintaining confidence in the network's integrity is crucial for its long-term viability.
This has been a truly profound deep dive into Bitcoin's transformation. It's crystal clear we're moving well beyond seeing it as just a niche asset. It's becoming an increasingly integrated component of the entire global financial system.
Absolutely. And the central tensions are just fascinating to watch play out. You have the convergence of macroeconomics in crypto, you have that paradox of institutionalization versus decentralization, and you have the evolving relevance of its traditional four-year cycles. It's a really complex landscape, but, one that offers incredible insights into the potential future of finance itself.
So as you, our listener, consider all this, maybe think beyond just the market fundamentals and the technical charts. Also weigh those geopolitical and regulatory risks we touched on. the kind of factors that could fundamentally alter Bitcoin's very character and how accessible it is in the future.
Definitely. Bitcoin's future will certainly be defined by how these complex interplays of forces, technology, regulation, adoption, geopolitics ultimately resolve themselves. It's going to be quite a ride.